present and very warm welcome to everyone. Thank you for joining today's webinar on cross-border remittances in times of COVID-19, issues and policy solutions, co-hosted by AFI and UK Department for International Development, DFID. My name is Hanako Nishigori. I am the Manager for Global Partnerships and Donor Relations at AFI. I will be supporting today's webinar. I would like to acknowledge the presence of Mr. Norbert Mumba, Deputy Executive Director for Alliance for Financial Inclusion, who will be giving the opening remarks. Also, among our esteemed participants, we are honored to have Mrs. Mobonu Nakzoda, Deputy Chairman of National Bank of Tajikistan, and Mrs. Saulola Raga, Director General of Central Bank of Tunisia. Thank you for taking time to participate in this webinar. Today's webinar will be moderated by Gias Mohamed, Senior Policy Manager for Digital Financial Services at AFI.
Thank you very much, Hanako and the AFI team, Gias. Let me start as well by acknowledging the presence, as Hanako says, of the Deputy Chair of the National Bank of Tajikistan and also the Director General of the Central Bank of Tunisia. And of course, our partners and particularly for this partnership, DFID. And I know that on the technical front, we have Yemi to assist us to navigate through this webinar. So warm greetings, everyone, and again, welcome to the webinar. I hope all of you are safe and in good health despite the pandemic that is ravaging the world. And also really to thank you for joining us on yet another important webinar. This particular webinar comes at a time when the world is racing to find a solution to the global health pandemic that is racing across continents. As the world races to find a solution to halt the global pandemic, there's also a need for us to race to find effective policy solutions to halt the impending global economic downturn. As it has often been said, global problems require global solutions. And there's no better time than now for us to discuss cross-border remittances, as these are key to the recovery process post the COVID pandemic. I would therefore start by appreciating our partners, the Department for International Development, DFID, for their important contribution to the delivery of this webinar. We recognize that the technical and practical import of this collaboration is timely and appropriate, as the UK is an important country in terms of remittance origination, with over 10 billion in annual flows in 2018 alone. Therefore, DFID is pivotal to the discussions today on practical policy solution, digital innovations, and cross-country collaboration to overcome the immediate challenges that are linked to COVID-19 and the medium to long-term actions to improve cross-border remittances. As the world makes the welcome turn towards recovery, I believe we echo the commonplace consensus on the expectation placed on policymakers and regulators to provide leadership and guidance as many countries begin the necessary journey of economic recovery and actively stem the adverse ripple effects of the current global situation, particularly in the lives of the vulnerable, such as women, elderly, the informal sector, micro, small, and medium enterprises. Let me also recognize in the first instance the path the path to recovery might present several options and opportunities. Interestingly, cross-border remittances is identified as an important tool that can contribute to economic growth and sustained financial inclusion. In 2018, AFI member countries received more than 380 billion United States dollars in remittances, with research indicating that a greater impact than official development, that this was of greater impact than official development assistance, or ODAs, commonly referred, and also foreign direct investment, FDI. So again, you can see the importance of remittances in our countries, particularly developing countries. Secondly, as a consequence of the COVID-19 pandemic begins to unravel and its impact on different facets of life becomes increasingly glaring, cross-border remittances is not spared. So we see World Bank focus that the crisis will cause global remittance flows to decline by around 20% to 445 billion in 2020 compared to 554 billion in 2019, making this the sharpest decline in history, in recent history. Apart from the loss of income owing to lockdowns or movement restriction, another reason may be due to the challenges in sending money back home to home countries amid shutdowns that have caused agents to close, thus making sending and receiving remittance difficult and nearly impossible where digital options are unavailable. Looking beyond the gloom, we believe this presents an uncommon opportunity for regulators to address long-standing challenges and prefer policy solutions to ensure an efficient, affordable, and inclusive ecosystem. Further to this point, it is our hope that this webinar will serve as a platform for us as a collective of regulators to develop developed country partners, industry partners, and actors to present policy and financial inclusion related interventions targeting service providers, the poor, migrants, remittance dependent population, and other vulnerable groups, including women and youth. Then, as we look at a vulnerable population, let us look at the important buckets that we need to address as we develop our intervention. The first, let's discuss regulation. We hope that through the deliberations and insights that we share today, we begin to see clear pathways towards harmonization of regulation and deepened cooperation between sovereign states on both sides of the remittance spectrum on key policy areas such as AML, CFT, currency exchange, consumer protection, awareness, digital financial literacy, etc., both for the immediate term to cushion the current burden on remittance-dependent populations, and also for the medium term. There's also attention that has to be had to infrastructure. We encourage all participants to contribute thoughts and ideas on opportunities to build synergies for domestic and cross-border interoperability to facilitate efficient and cost-effective movement of remittance funds, yet not losing sight, but upholding the tenets of stability, security, and resilience of cross-border remittance system. The third pillar is relating to market considerations. As we explore solutions to address challenges exacerbated by the sudden drop in remittance flows on the most vulnerable groups, women, elderly, migrants, etc., I encourage us that we consciously empathize with these groups and put forward time-bound, robust, and innovative technology-based business models to address the key pain points which relate to cross-border remittances, such as cost, convenience, transparency, privacy, and safety, especially in the context of restricted mobility and physical distancing. Lastly, allow me to emphasize that cross-border remittances, sustained financial inclusion, as well as broader recovery from the global emergency will continue to be shaped by technology. The digitization of cross-border remittances should therefore maintain high priority on our agendas. Specifically, the use of proven DFS solutions such as mobile money services and other such innovations to reliably offer an affordable, convenient, secure, and efficient way of saving and receiving remittances. This can be realized through an enabling and inclusive policy and regulatory environment around digitally enabled remittance solutions that considers the particular needs and behaviors of different segments of every market. This is also consistent with a call to action by the UK through its action group on cross-border remittances and some of AFI member countries such as Egypt, Mexico, and Nigeria, etc., towards the direct benefit to migrants, their families, and local communities from this initiative. Ladies and gentlemen, finally, I encourage all to ponder on ways to harness innovative regulatory approaches and technology to address present issues around access, usage, and quality of remittance services, sustained financial health of vulnerable groups, and how these insights can be drawn upon to enhance broader regulatory harmonization, consumer protection, and market conduct. I therefore wish you a fruitful deliberation and thank you for accepting to participate in this very important webinar in these times where we are challenged with the COVID pandemic. Thank you very much.
Thank you very much, Norbert, for the insightful remarks. So now I would like to hand over the floor to Gias to introduce our esteemed panelists and moderate the session. Over to you, Gias.
Thank you so much, Hanako, and thank you so much, Norbert, for those wonderful insights. Colleagues, greetings from Kuala Lumpur. Good morning, good afternoon, and good evening. Thank you so much for taking time and joining us for this webinar. I'm Giaz, Senior Policy Manager for Digital Financial Services at AFI. I'll just provide a minute's context on our work related to cross-border remittances. It started way back in 2014. More recently in 2017 and 2018, we came up with a guideline note on digitally enabled cross-border remittances led by the DFS working group. And after that, given the broad interest that the network has, we came up with a policy framework specifically for Africa Regional Initiative on cross-border remittances. Now, as all of us agree, the topic of cross-border remittances is of utmost importance to countries across the AFI network. A testament to it is colleagues from, I see some of the colleagues from Pacific joining us. I see Lana from Samoa and some other colleagues. Thank you so much, colleagues, for taking time and joining. We recognize that remittances is an important topic, and this has become even more important given the ongoing global pandemic. We look at cross-border remittances as an important resilience and economic recovery tool amidst the ongoing global pandemic. This is also a webinar which is co-hosted by like-minded stakeholders, UK's DFID. As Norbert mentioned, they have come up with a call to action initiative co-hosted jointly by UK government and the government of Switzerland. We have a panelist from DFID who will provide further details actually. And now, one final point is we expect this webinar to be to provide a solid foundation and also to provide actionable inputs and insights on the way forward with the work on cross-border remittances within the AFI network, especially in order to address the economic challenges underpinning the global pandemic. And we request participants, colleagues to actively contribute towards the discussion and of course ask questions as we progress. So with that initial thoughts, I would like to introduce the panelists and then kick off the discussion. Our first panelist is Mr. Moinuddin. He is the head of Pakistan Remittance Initiative. Mr. Moinuddin has spent around 24 years in economic research at the Central Bank of Pakistan. He has been heading the Pakistan Remittance Initiative since 2013. It's jointly launched by the Ministry of Finance, the Central Bank of Pakistan, and the Ministry of Overseas Pakistanis. As we go into the discussion, we would also like to know from Mr. Moin on the interesting joint initiative among the Central Bank and the ministries. Our next panelist is Mrs. Clarissa Kudover. She's the Deputy Head of Payment Systems Division at the Bank of Ghana. And Clarissa is also involved in drafting rules, operational guidelines and regulations for various payment systems operators and participants under the purview of Bank of Ghana. She is also our former chair at the DFS working group, and she still leads the gender work at DFS working group. Next, from the sending country perspective, we have Mr. Cormac Sullivan. He is the senior fintech specialist and international lead at Bank of England. He also coordinates Bank of England's FinTech Hub, where he leads on international issues and engagement. Prior to joining Bank of England, he was working with the IMF. Next, we move, we will get private sector perspective from Mr. Stephen Marshall. He is the Chief Commercial Officer at Crown Agents Bank. He joined Crown Agents Bank in November 2016, and prior to that, he worked with United Nations Migration Agency and with Standard Chartered also. Finally, we have Mr. Yemi Oluwakuide. He is the remittances lead at UK DFID. He is a private sector development practitioner with expertise in market development. He has worked on several DFID and World Bank projects in the fragile and post-conflict communities. Thank you so much, dear panelists, for joining us. A virtual round of applause for our panelists as we begin the discussion. I would like to begin the discussion with Mr. Moinuddin from State Bank of Pakistan of the Pakistan Regional Remittances Initiative. Sir, there are reports suggesting that Pakistan may be experiencing decline in the inflows of more than 20% due to loss of jobs, incomes, lower economic activity, so on and so forth. So, as Pakistan Remittance Initiative, what interventions are you undertaking to sustain the flow of cross-border remittances? Sir, over to you, please. Thank you.
Thank you, Gayas. And ladies and gentlemen, good evening. And a special thanks to organizers for providing an opportunity to participate in this important and relevant event. A sharing of policy responses by different authorities and organizations would help us to appropriately address the challenges posed by COVID-19 pandemic. And as Gayas said, that there were varying and very scary estimates by the World Bank, and our own initial assessment suggested a sharp decline in remittances of over 20% April 2020 onwards due to COVID-19 pandemic. So as proactively, PRI and State Bank identified some measures to mitigate the adverse impacts of pandemic, and these measures include facilitation, awareness, and policy support from the government of Pakistan. Let me summarize these very briefly because we have very short of time to the facilitation. It is assured in Pakistan that financial services should be available even during strict lockdowns in the country, though with reduced hours and limited staff, and with implementation of SOPs at financial institutions to protect both staff and customers. Similarly, overseas branches of Pakistani banks provided services to remitters where banks were not allowed to operate. This particularly helped when exchange houses in most GCC countries were closed. Banks also advised to ensure availability of adequate cash in remittance-rich areas to cater the cash uh, recipients of remittances. Next, we emphasize banks to create awareness, particularly about their digital channels, both at sending end and at receiving ads, by using electronic media and social media, and by using their database of remittance contact numbers. uh, they send direct messages through their digital products, and uh, I will explain further later. Banks were recommended to inform the available digital online channels for sending and receiving remittances. Banks were also suggested to conduct similar campaigns with their overseas correspondents and tie-ups. One particular thing, we encourage banks and exchange companies, those who are doing remittance business, to promote remittances through different incentive schemes, giveaways, gifts, lucky draws, and some banks offered gold, prize bonds, cars, motorcycles, cash uh, prizes on daily basis, and also emphasized to aggressively market these schemes. In response to the above, banks augmented their efforts through the period. Besides other marketing tools, record number of TV commercials of individual banks and a joint TV commercial by 6 large banks were aired on domestic TV channels and their international transmission in recent months, with particular focus on awareness regarding digital channels. Uh, I would like to add that electronic media, TV, is very popular in Pakistan to communicate any message to masses. It is worth mentioning here that an active support of the government of Pakistan to promote remittances also proved a shock absorber during COVID-19. Government of Pakistan amended two of the schemes in middle of April. Number one, to accommodate small remitters through expanding the scope of free send model. As you know, that Pakistan is the only country who offers remitters to send remittances without any cost, and remitters also beneficiaries are also not required to pay any charges or fees on receiving their remittances. So earlier this threshold was $200, the minimum threshold, but we reduced it to $100 to accommodate the small remitters. Number two, broadening the scope of performance-based marketing incentive scheme for financial institutions. Earlier, the scheme was designed to provide ₹1 for every dollar over and above 15% growth in the calendar year. But due to the design of the scheme, only small-based institutions can qualify in this scheme. So to include the big ones, we converted this scheme into tier-based, the 5% growth threshold, 10% and 15%, and we will compensate them and provide financial assistance if they increase remittances over and above these growth rates. The important thing is that what is the outcome of our proactive approach? I am pleased to inform that the above efforts negate our own estimates and World Bank's assessment. These efforts help to restrict the adverse impacts of COVID-19 on flow of remittances to Pakistan. Remittances to Pakistan declined by only 4.3% YOY during the peak of pandemic period, and lockdowns during March to May 2020. However, this decline has been more than offset by a very strong growth of over 50% in June 2020. The surge in June 2020 remittances is mainly attributed to funds that could not be sent due to lockdowns and higher demand from families on account of both Eid al-Adha and pandemic. And we concluded these two factors on the basis of a short survey of remitters in GCC. In overall, remittances to Pakistan increased by 7.8% during March to June 2020 period, in contrast to our expectations of sharp decline. And this has very important implication for your work, what AFC is doing, and what DFID is trying to do, because similar trend observed in Bangladesh as well. Bangladesh witnessed 35% growth during June 2020. Unfortunately, monthly data for other remittance recipient countries is not available so early to make a comment, but it suggests that digital channels are not adopted fully by remittance customers, and there is huge scope and opportunity to promote digital channels. This is my assessment.
Thank you.
It is surprising that COVID-19 has been reshaping all the businesses, particularly financial services. Our data suggests that banks with automated processing systems, with mobile wallet product, and with direct account credit facility with large global money transfer operators registered strong positive growths in remittances as against declines in remittances by banks without these products and automated processes. So the advantage goes to more automated financial institutions. It must be remembered that we have witnessed direct to or first round impact of COVID-19 on flow of remittances so far. The indirect or second round effect of COVID-19 due to significant slowdown in economic activities and lower oil prices are yet to be hit labor markets, particularly in Middle East. The key lessons learned from the pandemic reiterates that access to financial services is an important factor to ensure a smooth flow of remittances, and that also leads to conclusion that this is the right time for the banks to promote digital channels and direct account credit remittance products and remittance customers. This would not only improve efficiency in remittance ecosystem, but it would also accelerate much needed financial inclusion of migrant workers and their families. Thank you.
Thank you so much, Moin Saab, for that comprehensive and practical overview of the initiatives taken by the Pakistan Remittance Initiative. A quick follow-up to you. You specified the importance of digital channels to enable access and to facilitate remittances. I was wondering if you have a record of the growth of digital remittances over the last few months, or increase in the proportion of digital remittances to the whole remittances that have come into Pakistan. Have you done any assessment of that?
Yeah, it is in 3 digits, not in double digits, but in 3 digits. But due to low base, growth rates might be misleading. But amounts of remittances under digital channels are increasing tremendously.
Okay. Maybe I can also squeeze in a question from the floor. We have Sonia Plaza who's asking this question. Could you indicate the volume of digital remittances and how much moving from other channels? So this is closely linked to the question I asked.
If you allow me, I will retrieve the data and I will tell you the exact numbers, the increase in mobile wallet and other channels.
Sure, thank you so much. Please take your time. If not within this webinar, maybe after the webinar also you can provide this question. And the question, by the way, was from Sonia Plaza. She represents Nomad and the World Bank. Thank you so much. Let's move to our next panelist, Clarissa from the Bank of Ghana. Ghana has been a leading country in sub-Saharan Africa with respect to mobile money and other fintech-related innovations. Clarissa, from your perspective, can you share how COVID-19 has affected remittances to individuals and also to smaller businesses in Ghana, and what measures the Bank of Ghana is undertaking, especially from mobile money and digital innovations perspective? Clarissa, over to you, Chair.
Thank you, Gihat. Good afternoon from Accra. In the overview under the session brief that was circulated to us, it was indicated that the World Bank forecast a dip of about 20% in cross-border remittances due to C-19. In as much as C-19 has had a massive impact on the industry at large, essential workers were allowed to work during this period, and they formed the bulk of those below the breadline and had hit by lack of paperwork and formal structures. However, it is worthy to note that even though the bulk of those who were hard hit were essential workers, in our part of the world, the impact, so far as the severity of it, wasn't like what happened in the Asian corridors, because our workers could go to work, even if it was on a rotational basis during the lockdowns. And when the restrictions were relaxed, they continued to do their regular businesses. On the African corridor, and more particularly Ghana, we have rather experienced a sharp rise in digital remittances, experiencing about 7 to 10% rise during the lockdown to post-lockdown period. This revelation was interesting because at the end of December 2019, total inflows was 4,053.69 million USD. As at the first half of 2020, total remittances recorded was 2,182.36 million USD. A simple doubling for the sake of analysis, that the second half will record the same amount, holding everything else constant, shows an increase of about 7.67%, confirming or reflecting what the industry players shared with me. So taking it forward, we may have to wait till the end of the year to see if this adverse impact, as the World Bank has indicated, was really the case in Ghana. But as it stands now, Ghana's corridor has experienced a rise in the first half of 2020. From discussions with some key players, they indicated that they have noticed that digital has played a significant role during the COVID, with volumes growing from a paltry 0.8 to 1% in 2019 to about 6% in 2020 over less than a 9-month period. Those who previously were not using digital channels had to quickly come on board to be able to receive their funds. Some of the initiatives that Ghana took during the period to lessen the severity of the restrictions was to remove charges on low values that were going through the mobile money platform, as well as increase their daily transaction values. So this is what the picture looks for Ghana for now. On the gender front, unless you want me to hold on now and talk about it.
No, thank you, Clarissa. I'll come in the next round for this point. But it's interesting to see the trend towards digital. Both the Bank of Ghana and State Bank of Pakistan clearly indicate that digital has played a key role. And also, at least in the last 2 quarters, we see a marginal increase in the remittances, and the future remains uncertain and to some extent bleak as other economic effects start to creep in. Clarissa, my question, I'll come back to you in a bit on small businesses and women aspect. I will move to Cormac now. Cormac, thank you again for taking time. As the panelists have already indicated, digital channels are relatively cheaper and are taking off rather rapidly. World Bank indicates that sending money through cash or over-the-counter channels costs 7.09% as compared to a mobile money channel, which costs 4.42%. And we know that Bank of England has been at the forefront of enabling digital innovations. One example of this is you allow non-banks to be part of the real-time cross settlement mechanism, which kind of cuts an additional layer and enables cheaper and more efficient cross-border flow of funds. So we just wanted to know from your perspective, how has this impacted in terms of cost and efficiency on cross-border payments and remittances? And what has been your approach in terms of measuring risks when you considered allowing non-bank players to come in and access your core infrastructure as such? Cormac, over to you. Thank you.
Thank you very much. Yeah, sorry, my video looks quite scary. Thank you very much to the AP colleagues for putting on this webinar, and thank you also to my fellow panelists. It's a great pleasure to be able to speak with you actually today. As you mentioned, Bank of England, we've done quite a lot of work on non-bank payment companies and looking at, with the modernisation of payments and new digital players, what we can do as the Bank of England to support effective cross-border payments. The UK is one of the largest outward or remittance sending jurisdictions, and as such, it's a responsibility we take incredibly seriously. We recognise that for too long, and our governor and former governor have both spoken extensively on this point. Remittances and cross-border payments have been too expensive and often too slow and too unreliable. So when we look at cross-border remittances, we look at well we mandate to ensure accessibility, in which role we provide a lot of core infrastructure for payment settlement, and we also have a subjective.
Cormac, allow me to interrupt you there. Your voice is breaking up, and it's echoing. I don't know what's the issue at your end, but your voice is not clear.
Let me move a bit closer to my laptop. Is that any better?
This seems to be relatively fine. Please continue. Thank you.
Okay, thanks a lot. So as I was saying, at the Bank of England, we are responsible for financial stability, but we also have a secondary objective to support competition in the financial sector. So when we looked at what we could do to support effective cross-border remittances, one of our guided by consideration of financial stability first and foremost. That sorry, is the sound still not clear? I'm getting some messages through.
Yes, maybe I'll come back to you in a bit, Cormac, if you're able to see what the issue is. Yeah, I'll come to you after Steve. Just give me a few minutes and then I'll come back to you. Well, that gives us the opportunity to move to our next panelist, Stephen. Maybe, Stephen, you can quickly introduce the work of Crown Agents Bank and its role in facilitating cross-border remittances in a so-called boring as well as exciting way. And more importantly, I mean, what we have observed is even if we see increasing digitization in terms of cross-border remittances, the stickiness or retention of funds is not happening. What innovations are out there in terms of creating a digital ecosystem, in terms of ensuring that the funds remain within the digital rails? Some ideas around it, and also your experiences around it would be helpful. Stephen, so over to you, please.
Certainly. Thank you, Giaz, and thank you to the rest of the panelists, and also greetings to those attendees, especially those central banks across Africa, the Caribbean, and the Pacific, who will no doubt be familiar with Crown Agents Bank. I'll take 60 seconds just to explain who we are. Giaz, just to your first question about where is Crown Agents Bank positioned from a remittance perspective. We're a wholesale bank based in the UK. So we are a provider of banking services to other financial institutions. So we don't bank consumers nor corporates. We a very narrow focus of client segments that we serve. So we serve central banks and commercial banks, typically from across emerging and frontier markets. And we provide banking services to OECD-based clients that are typically international development organizations and fintech remittance companies. So whilst we don't directly support diaspora remittances ourselves, we are an aggregator, as it would be, of remittances, because we will provide services to a host of fintech remittance companies, many of whom will be very well known to many of the participants and attendees on this particular call. So in terms of the digitization of those corridors, today we only support digital players. So we've never had an appetite to support remittance companies that take cash over the counter. We've seen as a risk that's been sort of fundamentally outside of our risk appetite. But we believe the controls offered around KYC are more robust when it comes to digital remittance companies, in our experience. And obviously the growth in since the COVID pandemic first started, as we've seen that migration away from cash remittances. In terms of innovation, I suppose there are a few key topics that spring to mind. So one, of course, is the advent of the real-time cross-border diaspora remittance, and that probably presents the initial, probably one of the initial pain points that we find. There is absolutely a desire from the public at large for real-time remittances, but of course, to be able to provide that underlying real-time remittance, invariably that means that mobile wallets and bank accounts in country are pre-funded, and that pre-funding, of course, presents a credit risk. So one of the things that we take very seriously, of course, as a UK regulated bank, we are governed by rules and regulations set down by our regulators, and the likes of KYC, AML and CFT are absolutely pivotal three-letter acronyms that we have all become very familiar with. But sort of the advent of digital KYC around much more robust screening, especially in the fintech space, the ability to fund in country on a just-in-time basis, and then to pay away not only to mobile wallets, but also on a real-time basis to bank accounts. And increasingly, we've seen that as a demand from our clients. So to such an extent, we bought a fintech, and Segovia provided a digital payment gateway that we allow our clients to use, and it also provides cross-border real-time settlement into mobile wallets across a number of countries in Africa, although we are looking to extend that to new geographies. So the kind of digital innovation has been, I think, always been at the forefront of our minds in Crown Agents Bank, certainly in the last 4 years or so when we've been under private ownership. But clearly COVID has played to that, and I think it would be remiss of us, and indeed the rest of the industry and the regulatory bodies, not to seize upon the opportunity presented by this very unfortunate pandemic. But certainly we should face into that and be able to embrace some of the changes that it will drive, because I think these will improve financial inclusion as well as consumer protection in the long run as well.
Thank you so much, Steve, for that very insightful remarks. Let me at this point move to Yemi from DFID. Yemi, maybe if you can briefly let us know the role of DFID as an ecosystem enabler, especially with respect to cross-border remittances. How have you been able to mobilize cooperation, collaboration among countries, various stakeholders globally and at a regional level, especially amidst this global pandemic? Over to you, Amy. Yemi, I think you're on mute, and if possible, we will also request the panelists to come on.
Hello, can you hear me now? Is it better?
Yes. Yes.
Okay, thank you.
Yeah.
Oh, thank you very much. Thank you very much for your question. Basically, there are a couple of things. And the first thing I would say is that this is exactly the reason why the UK government, with the government of Switzerland, the World Bank and other similarly minded partners, actually led a call to action in May. One, to raise the issue of remittances, to raise the profile of remittances, basically to address the slump in remittances, one, and to improve the flow, its flow. Part of what we've been doing in the UK is we've been pushing internationally to raise the profile of remittances among G7 and G20 partners. We're also working in partnership with World Bank, with some other programs to identify opportunities in several developing countries, focusing mainly on financial inclusion, trying to include as many people as possible in formal financial services that can and that will really aid digitalization of remittances. Also, one of the things we did in the UK in April was that remittances, for example, was declared as an essential service provider, and therefore they were exempted from lockdowns. This was done in a bid to keep the flow moving. But in addition to all this, we engage with industry players, we engage with industry associations, trying to understand from their perspective what current issues they face, and trying to work through those issues together. And we also engage politically in a couple of countries as well, trying to work with other partners, especially, again, as I said, on financial inclusion, and also working with central banks, trying to see how they can regulate, they can encourage more competition within the remittance industry or market in itself. One of the things we're careful not to do is to directly influence what's happening in the market, but to rather encourage more competition and to encourage more competition and to encourage better regulation that can actually aid in the flow of remittances.
Thank you so much, Yemi. Something that the point on ensuring financial stability and at the same time ensuring competition among the players, traditional and new, seems to be the priority among stakeholders. Let me try to pull in Cormac now. Cormac, can you please come in now?
Sorry, can I just quickly can I just briefly add that we would like to encourage as many countries as possible that have not signed up to the call to action to please indicate through you, so that we can also add them to the call to action list. Thank you.
Sure. Thank you so much, Yemi. On the call to action in itself, allow me to do a quick follow-up here. On the call to action itself, how many countries are on board with this initiative? And especially, we would be interested to know from emerging market economies, what are the countries that have come on board? And maybe very briefly, what does this call to action say? Yemi.
So we have a lot of countries that have joined the call to action from different parts of the world, and some of them are on this call. Countries that come to mind: Jamaica, Nigeria, Mexico, Honduras, Australia, New Zealand. As I said, we have quite a few countries, close to 30 countries, if not over 30 countries. And basically, the call to action is, one, to raise the issue of remittances amongst the countries. One, two is to work with the participating countries and partners to see how we can support them in encouraging the flow of remittances. One, to the countries, one, and two, also supporting them to address issues of remittances in originating countries. So we have countries where remittances originate from the sending countries, and countries where they receive them. So basically, is to, one, work with policymakers and regulators to one, raise the issue of remittances, and to also highlight the key issues, the key things that they can quickly do to improve the flow, to reduce the costs. That's the most important thing. Yeah. And secondly, is to also work with like-minded partners like World Bank, IOM, and so many other partners. Okay. Thank you.
Thank you so much, Yemi, and good to know that there are many countries from emerging market economies to work towards harmonization of policies and regulations from the highest level to ensure efficient cross-border remittances. Thank you so much. I invite Cormac to come in and provide his intervention, please. Thank you.
Thank you very much. I hope the audio is better now. If someone could just...
Much better. Thank you.
Brilliant. Fantastic. Well, thank you everyone for the impromptu technical support. And just to say again, thank you very much to AFI and to the attendees and fellow panelists. I guess what I wanted to say from the Bank of England's perspective is that, you know, there's a lot that can be done on the sort of the industry level and also around regulation, but there is also a really important role for the underlying cross-border infrastructure that enables settlement. At the Bank of England, we have a primary mandate for financial stability, which is what informs a lot of our work on payments. But we also have a secondary objective since 2014 to promote competition in financial services. And under that lens, we've taken several actions to support more competition within the financial sector. The UK, people may not have been able to hear, but the UK is obviously one of the largest remittance sending jurisdictions in the world. And at the Bank of England, we recognise that there is significant room for improvement in the cross-border payment space. So to give you one sort of concrete example of something we've been working on, we took the decision in 2016 to allow non-bank payment providers to have settlement accounts with us at the Bank of England. The opening up of access to non-bank payment providers, previously to this, it was only banks who were able to hold settlement accounts, and therefore there are a range of transactions that if you're a specialist payment provider, you would have to go through a bank in order to be able to execute through being an indirect participant in various payment systems. We took the decision, looking at the maturity of the the non-bank payment providers to expand that access. And that was partly a question of competition. So prior to that action, non-bank payment providers had to pay banks for the privilege of enacting these transactions. But there's also an important resilience question. By sort of creating chains of dependency between different firms, you create a sort of a central point of failure. Whereas if firms can separately access the systems, there is sort of more resilience there. What we have seen since granting access to initial 6 firms is that this has supported competition in the sector. One of the firms who now has direct access is TransferWise, who I think will be familiar to many people on this call, as one of the sort of largest new players in the payment space and the cross-border payment space, and particularly working on driving down cost. Of course, with any regulatory action, there are going to be new risks to be managed. There are direct risks to payment system users. So Stephen has already pointed out some of the liquidity issues around cross-border payments. And so, you have to ensure that liquidity risk can be managed, settlement risk, operational and cyber risks. But there are also wider risks around sort of AML, conduct, financial crime. In order to mitigate those risks, we firstly made sure that new providers had to meet the same sort of high standards. And we also strengthened the conduct and AML supervision requirements that were placed on any firms who were seeking direct access. I'll leave it there, and perhaps we can get to questions in the Q&A.
Sure. Thank you so much for providing those insights, and thankfully the voice is very clear this time. Thank you, Cormac. We have a question that is coming from the floor on how, and this is especially the case with increasing digitalization actually, and I would like to bring in Clarissa here. So what measures should be taken into consideration to avoid fraud while executing remittances? I would like to add to this and kind of also talk about consumer protection related issues that we need to be mindful of, especially when we digitize cross-border remittances. And we also, I mean, maybe you could also talk about it from a gender perspective. We see that women could be more vulnerable. What initiatives need to be taken here? Clarissa.
Thank you.
Yeah, sure. Clarissa, go ahead.
We are not oblivious to the fact that just as the volumes are increasing, so is the fraud. And we have seen the trend. And for us, it's worrying. I don't know whether you've been following the media, where our governor has given assurance that Bank of Ghana is doing everything possible to try and stem the tide in mobile money fraud, because it's quite worrying. And those are where we have the micro values. And if you remember, when I came to Bahamas, I shared that table where we saw that the recovery or the loss rate was higher for mobile money fraud cases compared to POS, ATM. And so there's a need to watch that space. In as much as we are encouraging its growth, we should watch that space. And in the light of that, what Bank of Ghana is doing is that we have engaged the GIZ, one of our development partners, to help us develop consumer protection directive in the DFS space. This was a follow-up of findings of 2 diagnostic reviews from the demand side and supply side on fraud, cybersecurity, risk management, recourse, information disclosure, as well as transparency in DFS. we are hoping that once this directive is drafted, in fact, we are doing together with not just the regulator and the development partner, we are doing it together with the association body of all these players within the DFS space. And so the consultant has started the work engagement with that on silo basis. We are yet to have a joint workshop where all three bodies will meet to look at the issues on the four.
Okay.
On the gender front, women who were more vulnerable in the past and exposed to the threats of hawala were sending money underground through third parties. People got to the border points and then they send the money through Momo to others across the other side of the border. Sometimes never got to the intended beneficiaries. They put the cash in the containers, which ended up being risky. Sometimes they never got the monies, and sometimes even the women got raped whilst trying to chase their funds. Now the women are feel more safe with digital, that is the mobile money, or it terminating the bank account, because they don't have to chase people for their funds, and households are also able to receive the funds in their wallets independently. And this accounts for some form of privacy for the woman. For instance, if she went to an agent, everybody in the community knew that she was either going to cash out or collect money or do some financial transaction. Now that privacy is guaranteed because it goes straight into her wallet or straight into her phone. Nobody knows what is happening there. This task provides fertile grounds to drive the agenda to close the financial inclusion gap. Due to COVID-19, women have found themselves having to use digital channels to pay for their utility bills. I think previously they were not doing. And because of the lockdown, you needed power, but you couldn't go there because of the restrictions. And so suddenly, instead of making cash transactions, they are going digital, because these cash transactions have become a bit unattractive and time consuming, especially for primary caregivers who are also scared to send their children out on such errands, an errand that previously these kids were doing. And so they just didn't have the time to go and be social distance to pay utilities or even access a financial service in a fixed location, financial location. Thank you.
Thank you so much, Clarissa, for those insightful remarks. Let me also bring in the other regulators in the panel on how can cross-border remittances positively affect women, act as an economic empowerment tool for women, especially amidst the crisis. We see, especially in emerging market economies, most of the recipients are women. And from a sending country perspective, most of the women, especially making small micropayments, increasing proportion seems to be women. So how are the hard regulatory frameworks enabling women to send money home and also receive, but also the softer aspects of awareness, development of literacy, and product development and segmentation and all looked at when we see at women and cross-border remittances. Maybe I can invite Mr. Moinuddin Saab, and then we can go to Cormac. Moin Saab.
If you look at from Pakistan's perspective, we have only 1% women remitters. But in a survey conducted in 2019, we found that around 29% women are receiving remittances directly. But ultimately, if bread earner of the family or head of the family is living abroad and sending remittances to support his family, the woman has disproportionate burden to manage the family and other all stuff, child's education and etc. So I think this question is more relevant to African continent or the Philippines and Thailand, where a majority of women workers are abroad.
Thank you, Moin Saab. But at the receiving end, at least you made a very valid point that 29% of the receivers are women, and they have to make critical decisions around spending that money, household expenses, so on and so forth. So have there been any specific initiatives that the PRI has undertaken targeting women, specifically related to cross-border remittances?
What we are promoting is to create awareness and convenience for digital channels among households.
Mm-hmm.
Even some of the families, in Pakistan, in some areas, women do not allowed, or they don't want to go to a bank branch to receive their remittances.
Mm-hmm.
So we are promoting mobile wallet product, and we are giving ₹2 airtime on every US dollar if remittances are received in mobile wallet.
Okay.
So just to compete informal channels, we are trying to promote digital channels among households, and particularly to women, those who cannot visit there. But particularly from social perspective, we have Ministry of Overseas Pakistanis who is taking care of migrant families back home.
Thank you. Thank you so much, Mr. Moin, for those inputs. Maybe Cormac, can I quickly invite you to provide some inputs if Bank of England, yourself, or through the stakeholders you're working towards addressing specific disadvantaged segments from the sending end. This could be women who are working in informal sectors. Also, it could be forcibly displaced and other disadvantaged sections. Are you doing anything specific in this regards, Cormac? Is there anything that we could learn, the network could learn?
Yeah, so let me start with some sort of high level sort of remarks. I think, one thing that is clear about innovation is that the best innovation makes products that are needed and are easily used by consumers. One of the heartening things in the number of new specialist sort of fintech firms, whether they be cross-border payments firms or a whole range of financial service activities, from digital banks to a variety of other things, is that they do really place an emphasis on engaging with customers, and many of them have sort of specific propositions that are addressed at either female customers or specific groups with specific needs. In particular, the Islamic finance community, for example, in the UK, which represents a significant proportion of UK citizens. At the Bank of England, I think there's two things. One is empowering a competitive and a diverse financial system, and we do that through appropriate regulation and supportive infrastructure. But then there is also a second element that is primarily handled through our Financial Conduct Authority, and that gets to some of the points you were raising, Kiaz, on consumer protection, digital literacy, and some of the sort of enabling factors. And with digital literacy, I think there is a big role to play for all financial regulators, not just in programs to support and improve digital literacy, of which the Bank of England does have some initiatives we can speak to in more detail. But I think there's a wider point that it's also incumbent upon us to deliver and to explain regulation and financial sector policy in ways that are easily understood. So the analogy, if you like, is, how good is your literacy, but also how complicated are the books you are reading? I think there is things to be done on both ends. And at the Bank of England, we certainly place a strong emphasis on clear communication around financial and economic policy decisions with that in mind. So across those range of areas, there are things we are doing to empower new innovators who can target specific communities, but also to promote digital and financial literacy, and also ensuring that our regulation is sort of appropriate and clearly communicated. Thanks.
Thank you so much, Cormac, for those insights. So clearly, it's not just the literacy that is important, it's building the capability and the overall financial health, both from the sending and receiving end, that is important. That point is really well taken. There are a few questions that are coming in from the participants, so maybe we can spend the next 5 minutes addressing these questions. One question to Cormac, yourself, while you're at it, is there proportionality in the application of regulations to money transfer operators that you have now allowed to the settlement accounts with the Bank of England? Cormac, this question is to you, please. Thank you.
Sorry, could you repeat the first part of the question? Yeah. I think I'm looking at the wrong
Is there proportionality in the application of regulations to the money transfer operators that you allow to?
Thanks. I see it now. So the money transfer operators that have settlement accounts are subject to the exact same requirements as any other institution that has a settlement account with the Bank of England, which, as I said, are the commercial banks. So we do not lower our standards in order to sort of enable competition in that way. There are payments companies in the UK that are in different areas of the regulatory perimeter, in line with their size and the nature of the business they are conducting. So there are elements of proportionality within the wider system, but we're quite clear that on this question of non-bank access to settlement accounts, that the exact same regulations and requirements are put in place in order to ensure a level playing field, which is absolutely vital as far as we're concerned, but also because we have confidence in the appropriateness of those regulations and requirements. We put them in place for a reason, and we want to empower firms so that they can meet those requirements and deliver high quality financial services that meets the needs of financial consumers without compromising the wider financial stability of the system. Because you can potentially give a short-term boost by lowering regulation, but if it's at the expense of sort of financial stability, and you have firm failures and you have consumers being left out of pocket, you will ultimately not achieve your policy goals around inclusion and effective financial services. Thanks.
Thank you so much, Cormac, for that response. Colleagues, we are entering into the last 15 minutes of the discussion, and we would not want to go without agreeing on the next steps. How do we want to address the salient points that the panelists have addressed? In terms of, let me just summarize. Digital has played a key role in facilitating and sustaining cross-border remittances within the ongoing pandemic. So how do we ensure that we facilitate digital cross-border remittances going forward, keeping in mind the ensuing risks related to consumer protection and fraud? As much as financial stability is a core mandate of the central banks, we also need to look at providing a level playing field, competition among the market players, different type of entities, and also ensuring inclusion among various segments. So that's the second key point that came in. Third point that came in was around creating awareness and building capability beyond literacy, building capability of both the senders and the receivers when it comes to cross-border remittances. Finally, we also briefly talked about the role of gender when it comes to cross-border remittances. Many of the recipients are women, and especially in specific corridors, a majority of the proportion of senders are also women. So how do we come up with enabling regulatory frameworks and product innovations to facilitate women in accessing cross-border remittances, both at the sending and the receiving end? These are the points that came in. I encourage further contribution from the floor on what can we do going forward in order to implement these points within the network and beyond going forward. Your thoughts, and I request you to put your thoughts on the chat tab, please. Thank you so much. I'll ask this question also to the panelists, but let me take a question from the floor now. There's a question from Daniel, Bank of Uganda. In a cross-border setting, how can we effectively harmonize the legal and regulatory framework in various jurisdictions to facilitate remittances? This has been one of the key pain points in terms of harmonizing regulations amidst within various geographies, but also between the sending and the remittance receiving corridors actually. At this point, I would like to invite Yemi to come in to ask if DFID is doing specifically anything in the interest of harmonization of regulations within various corridors. Yemi? You're on mute. Yes.
Hello, can you hear me now?
Yes.
Okay, thank you. So we have multiple approaches in DFID. One of our key approaches is the corridor approach. Basically, looking at the corridor from UK to specific countries and trying to look at the whole range of issues that they have from country of origin, from the UK down to the specific country. Let's use Uganda as an example. So what we try to do is look at what are the key issues, regulatory issues in the UK that will work. So we have a cross-government group that will work together with other government departments to say, okay, these are the key issues and how can we go about addressing them. That's very important for us here. And in those countries as well, so say Uganda, we also work through a couple of other projects or other donor partners to look at, and this also includes the AU, the African Union, and basically it's about, okay, what are the key issues around financial inclusion here, and what are the key regulatory barriers. One of the key issues which we try to look at is so many issues, so depending on the country, but are there, for example, taxes on remittances that penalizes the receivers, for example, the exchange rate windows, even as much as encouraging competition. Do we have other non-banking players within that space that can actually help encourage competition? So what we do, so the point I'm making is that our approach is looking at things along corridors and looking at areas where we can actually address specific constraints that are unique to those corridors. And we also try to see what lessons we can learn from a specific corridor that can be replicated elsewhere. So I work on, and I think the key thing here is that I work on remittance is not just about sending and receiving money, but there's a huge strand of financial inclusion involved. 1, 2, there's a huge strand of encouraging transparency from end to end for traceability of funds, for many obvious reasons too. And number three is there's a huge trend of work around reducing the cost of remittances in themselves. What are the key reasons? What are the key reasons why the cost of remittances are high? Regulations to be part of it, for example. But the key thing we're trying to do here is to discourage people from using cash, but migrating them to digital. Thank you.
Thank you so much, Yemi. Maybe I can invite Stephen also on this point. Stephen, I'm sure you have experience of working in multiple geographies that have different compliance and regulatory requirements. How have you gone about addressing this issue, and what is your suggestion to the regulators in terms of harmonization of regulations related to cross-border remittances? Stephen.
Thank you very much. It's a very pertinent question. The regulatory approval process is probably the single most challenging aspect when it comes to supporting cross-border remittances, especially for diaspora remittances. So I absolutely empathise with the central bankers and regulators, not only in the panel but also in broader attendance. There has been such a marked change in the payment landscape in the last few years that obviously all of the regulatory bodies are having to think very fast and to implement changes very quickly in order to stay abreast of the current climate and to ensure risks are suitably mitigated. But that, if you think about central bank approval to support international money transfer, in our experience, it can take somewhere between 6 weeks and 18 months to receive approval. And that might simply be a letter of no objection. So it can take an extraordinarily long time. And whilst we absolutely empathise with the regulators, I think the reality is the model in most countries is geared towards supervising locally incorporated money service businesses. So what you find increasingly today, of course, are aggregators in the market. Crown Agents being a prime example. And we would lean very heavily on the fact we're a UK regulated bank, and that comes with all of the controls and mitigants that you would imagine, and therefore it's finding a middle ground, a common ground with regulators around what is acceptable. I say I'm probably biased. I think we come with a gold standard when it comes to controls and governance, and we're happy to share our views and thoughts with any particular central bank. And invariably, when we have a discussion with the governors or deputy governors, or indeed the heads and deputy heads of various departments, particularly payment systems or financial markets or financial inclusion, then absolutely they understand why an aggregator would be a very beneficial provider of services into a country, but there isn't the right regulatory framework in order to approve that. So I think a refreshed look at the aggregator world would be really helpful for helping to streamline remittances. I think the second thing I would point out to regulators, and I think the question has been raised by somebody on the chat forum around, you have telecommunication regulators, you have central banks, you have different regulatory bodies who should take the lead when it comes to regulating things like mobile money. And I suppose I would defer to the experience we've seen in sub-Saharan Africa, which I think very conscious that we have obviously Muradin on from Pakistan, which has also had a very rapid. But I think sub-Saharan Africa remains probably the geographic continent that is the leading light when it comes to mobile money. And I think having central banks take the lead from a regulatory perspective is beneficial. Equally, I think insisting upon interoperability between mobile networks and also mobile networks and bank transfers. So I think if those three things could be addressed from the regulators collectively, so one would be looking at the aggregator model, two would be looking at central banks taking the lead from a regulatory standpoint when it comes to mobile money, and the third one would be interoperability between bank accounts, mobile wallets, and vice versa, to ensure that financial inclusion can spread further and faster than it has historically.
Thank you so much, Stephen. Maybe I'll invite Cormac for a quick intervention in the interest of time. Over to you, Cormac, on the same point.
Thanks, Kiaz. I'll be really quick. Just to say, I think Yemi and Stephen, their points are absolutely spot on and go to some of the many challenges. And I just wanted to flag that, particularly at the G20 level, a lot of work is being done, in particular this year. The CPMI, the Committee for Payments and Market Infrastructure, has published in June of this year the building blocks of a response to better cross-border payments, and that includes a range of sort of 19 building blocks that are really quite comprehensive and broad, including things like the potential for development of new cross-border infrastructures, but also importantly things like moving towards better harmonized regulatory and supervisory frameworks, things like harmonization of data standards in payments messaging, which is often a crucial element, and a series of other aspects. This will be followed up by stage 3 of the G20 process, which will look for individual authorities to begin developing their roadmap of a response. So all of that is just to say that there is a huge amount of work on this subject going on. There is recognition that that alignment and harmonization is desirable, but obviously in practice, when it's a question of how you harmonize and how you take account of different economic and regulatory judgments around risk, that are rightly sort of national, the competence of national authorities. These are very big and challenging questions, but I did want to say that there is a huge amount of work going on at the global level. Thanks.
Thank you. Thank you so much. And thank you for also referring us to the latest CPM-IBIS report on cross-border remittances. Maybe if time permits, we can share that on the chat box. One question a very long question rather, that Mr. Rajesh has posted. Allow me to summarize it along with one more question that has come in, is on does the panel believe that more flexibility in KYC ML is needed to encourage competition? This is not only applicable to UK, but to the other jurisdictions also. So maybe may I invite Moin to provide his inputs, especially on the point of flexibility around KYC and AML when it comes to cross-border. Another point that came in is on IDs, especially for undocumented migrants forcibly displaced, to be able to send as well as receive remittances. This question, if I can request both Moin and Clarissa to respond and quickly within 30 seconds. Thank you so much.
Yeah, thank you, Gyas. This is very challenging actually. We have to strike a balance between AML and CFT rules and regulations. We have to implement it effectively. We cannot allow or relax these regulations because of the risks of terrorist financing or money laundering. So if you know, for sending remittances from some countries, there is no requirement of over in Pakistan, if someone has to send a single dollar or uh, uh, receive a single penny in Pakistan, one has to produce its ID, and the entire adult population in Pakistan is, you know, that it is biometrically verified. We have computerized national ID card numbers. It has all the details. So, I don't recommend to compromise on AML CFT rules and regulations. These should be implemented effectively. Regarding illegal immigrants, yes, there are problems. They are facing issues in jurisdictions, and they are using illegal channels, and
Okay, thank you so much, Moin Saab. I'll ask next question to Clarissa. This
Yeah.
is Clarissa. This question is coming from Ellie. She asks, "What is the we both yourself and Moin? You said that there is a marginal increase in remittances. So, have you looked at the profile of remitters just to see?" Like what caused increase in the remittances? Have you looked at the data around it, Clarissa?
No, not yet. In fact, we've just started with a portal that will be collecting these data along gender lines.
Okay.
Hopefully by the end of the year, all banks will start submitting. As of now, I think just a couple of banks have started. We haven't gone full live yet, so it'll be difficult to answer that. The answer there is no, it's not fully implemented.
Okay, thank you so much, Clarissa. Maybe this point is to Cormac.
Yeah, if you permit me, concerning
Sure.
to add on to what Moede said, Ghana, the remittance traffic is one way, is inbound. For all outbounds, it has to go through the banking system. They are licensed, authorized dealers of Forex. So our regulations do not permit an individual from the comfort of his phone to send out until it's changed. It will have to go through the banking system where the rigorous KYC rules are enforced strictly. Thank you.
Thank you so much, Clarissa. One final question, and then we'll
yes,
move to...
if I may add something to previous question.
Sure, sir. You have
Yes,
a tweet length response that you can give. Thank you.
certainly there were some new remitters during this June and July month. And these were, I think, motivated by the need of people to support them, to extended families and friends for donation and to, you know, financial help to those who are affected by COVID-19, or those who are fell sick and lost their jobs. So we saw some new volumes coming in, new remitters in this formal system. Thank you.
Thank you so much. One final question to Cormac before we come to a final round of discussion. Cormac, this question comes from the floor, wherein the participant asks what methods can be used for properly examining remittance services from a mobile money perspective. So I would make it more broad-based and talk about it from a broad, innovative digitalization of remittances perspective. Are there, given the increasing digitalization we are seeing in remittances space, from a supervision examination perspective, have the tools evolved? What has been your experience?
So I should say the majority of payment firms are not supervised by the Bank of England. They're supervised by our Financial Conduct Authority. The Bank of England only directly supervises a really small subset of the systemic payment institutions. But that said, I mean, obviously we think a lot about payment policy, both because of the potential risks and opportunities around the sector as a whole, but also because of our role in providing some of the underlying infrastructure. I think, so with all that said, I mean, I think other panelists may be better placed to come in here, but one of the absolutely key principles that underlines all of, or two key principles that underline all of our sort of work on financial technology is that firstly, the same activities should be subject to the same regulation. You know, this goes back to one of the points made earlier, that in order to facilitate effective competition and to improve financial services, the way to do that is really to empower firms to meet the high standards that are set. So whether that is by, you know, by looking again at what can be done to use technology to support KYC requirements, rather than looking at sort of ways in which those requirements can be lessened in some way. The second point is just to say that we don't look at regulating technologies, we look at regulating activities. I think that's also really important in the payment space, where there's lots of new innovations around things like DLT and other sort of forms of payment technology. You know, I think for us, the key is really to ensure that the broad level of resilience, consumer protection, and conformity with financial and financial integrity standards is maintained. Thanks.
Thank you so much. So last, we just have 5 minutes left. And I request all the panelists to come in and provide your suggestion. We don't want to leave this here. We want to take the discussions that we have here forward and come up with substantial activities going forward that facilitate cross-border remittances and act as an important resilient and recovery tool out of this crisis. So my question to the panelists, and I will request very brief responses, is how should regulators collaborate with fellow regulators as well as with private sector stakeholders to address the key points or key features that came out during this discussion related to increasing digitalization, building financial capability, and facilitating competition within the sector, and finally on facilitating access to cross-border remittances for women. So your thoughts on it? I'll start with Clarissa. Over to you, Clarissa.
Thank you. Sorry, Gihat. Collaboration with regulators can best be achieved through MOUs. Like Ghana, we have an MOU with the National Communications Authority, who is a primary regulator for the telcos, with the providers like the fintechs. Fortunately, through continuous dialogue, they've been able to set up industry association bodies, and that has helped us greatly because it has made the evolution process easy for the regulator, because through those engagements, we began to appreciate and understand the landscape better. And once we understand the landscape better, crafting the needed regulations and guidelines becomes more effective and easy. Thank you.
Thank you so much. Moin Saab, over to you.
I would strongly recommend to take this responsibility by some international financial institution, either World Bank or IMF. And the first step could be sharing of cross-border remittance data at a centralized place. Presently, World Bank is preparing a very useful data, on remittances, but the bilateral flows are estimated on the basis of a 2007 study, and we know that these are not correct numbers. So having correct data would resolve so many issues between the jurisdictions. It will become clear that how much money is flowing from one jurisdiction to another jurisdiction. So this could be the first step, but some international financial institution has to take the lead, and as suggested by the by my panelists, continue dialogue. So it is possible to arrange by some IFI. Thank you.
Thank you so much. May I request Yemi to come in at this point, please? Hi, Yemi. So let's move to Stephen by the time Yemi is ready. Stephen, over to you, please.
Sure, I'd actually just to echo Moin Udin's points around the World Bank and IMF. I think we've got the annual meetings coming up in October. I know they're going to be virtual again as they were in spring, but that presents the next natural opportunity for multiple central banks and private sector players to get together. I think you could do that regionally, because there tends to be similarities in the payment infrastructure and the mode of sending remittances, depending upon geography. So yeah, I would absolutely be supportive of engaging with any of the central banks or any of the DFIs to help orchestrate something on the fringes of the annual meetings in October.
Thank you. Cormac?
Thanks a lot. I mean, I would agree with that. The annual meetings this year, I think, provide a particularly strong opportunity to discuss cross-border payments issues. In terms of the sort of one key message, I think it's important for central banks and policymakers to not just think about their role in delivering regulation, but also to look at what they can do on the infrastructure and technology side with the systems that they operate and run. A lot of that work is like I say, underway, but I think there's a need to be really ambitious on this agenda and to move quite decisively. So look forward to working with colleagues in attendance and on this call on some of those questions. Thanks a lot.
Thank you so much. And finally to Yemi, if you can come in now. I think Yemi, but I will still, yes, Yemi.
Hello, can you hear me now?
Yes,
sorry.
Please. Yes, please go
Yeah,
ahead.
thank you very much. I think a couple of key things for us is one to improve data. One is to improve the quality of data we have, especially the volume of transactions through the informal channels. We think we don't know so much about what is happening within that space, and because of that, we're limited in what we can do actually. So one of our key priorities is one, trying to understand what's happening in the informal channel, what sort of transactions happen there, the primary means and mode, and what are the sort of support we can provide there. That's on a general note. Specifically on digitization, on financial inclusion, and on even specifically on data as well. One of the things we're also looking at is harmonization of the type of data that is being reported by different central banks, so that we have a basis for comparing the data, right, and for collating the data. That's very, very important to us. And then lastly on financial inclusion, basically, which I've been hammering on actually, is we're looking at how do we bring in other players, especially the telco operators, for example. Basically, how do we diversify the channel of reaching more people? Thank you.
Thank you so much. Thank you so much for those final remarks. Let me summarize. There's a need to have continuous dialogue with the stakeholders through MOUs, engaging with industry associations, working groups, so on and so forth. Data, the role of data in order to provide clear visibility of the cross-border flow of funds has been highlighted by many of the panelists. And Cormac's point is also very well taken in terms of moving beyond regulations and also looking at technology and infrastructure. and the role of central banks related to it. And Yemi's point is also well taken in terms of looking beyond the existing set of players and kind of looking at broader set of stakeholders who can contribute to the overall advancement of financial inclusion, and specifically in this context on cross-border remittances. So with this summary, I thank you so much, dear colleagues, for taking time and participating. I also thank the participants. We've had more than 100 participants coming in and participating and contributing actively to this webinar. Based on this discussion, we have noted down the key suggestions, points made. We will come up with a note on how to take this very important work forward.